Welcome to the webinar, everybody. My name is Walter Peters, as many of you know. I actually, when I come here and we have these sessions, I like to talk about naked Forex trading, which is, do I have any place to write on the chart here? Let me find a chart that's clean. Pound Swiss. Okay. I actually love to talk about trading naked without indicators. Naked trading means we're trading without indicators. I don't have a problem with indicators, and occasionally you'll find them in my charts, but I prefer to trade without them. Now, basically, Colin says, FX Street says I'm on at 11 GMT, and it's 10 GMT. I think it has to do with your settings. I'm not sure about that, Colin, but I do believe that your settings with your account will determine what time it says, but I'm not sure. I could be wrong on that. Because it's right on mine. I have my settings set to Sydney time, and it does give me the right time. But I'm not sure. The website shows 10 GMT. Yeah. Okay, so we've got confirmation. It shows 10 GMT. I think what happens is everyone has their own account, and you get to adjust it. Yeah, I think that's what's going on. So we're going to talk about today one simple way to increase our win rate. And actually, I have two examples from this week of trades that I used this thing, and it kept me out of potentially losing trades. So let me show you how it works. After I go over this technique, I'll be happy to take questions on any live markets. I'll show you kind of what's on my radar in terms of trades, and then any questions in general, as long as we keep them in the trading realm. I don't know if I can answer anything about cricket or alligator jerky, but if we stick to trading, I think we should be able to power through it. Okay, so let me give you. Actually, let me show you the Swiss yen, because that one was. No, the best example is actually the Singapore dollar. Let me show you the Singapore dollar. Okay. All right. So the Singapore. I don't know if any of you trade the U.S. dollar, Singapore dollar. It's a great pair if your broker offers it, because all the hedge funds in Singapore, they love to trade the home currency. I mean, you can't. How can you not trade your home currency? You know it. You're familiar with it. You know what the news is in your home country. So I'm kind of the same way with the Aussie dollar. I like to trade it just because, you kind of get a sense for it over time, what it's looking at and things like that. I don't consider myself a fundamental trader, but it is kind of easy to understand what's important in your homeland, isn't it? I mean, so it's a good opportunity for the hedge funds to trade their home currency, which is the Singapore dollar. Now, this is what I was looking for and it still actually may end up being a trade, but it didn't work out the way I was hoping it would. So this is what I did. I applied these rules. Now, most traders, there's two trades, so it's a really great, timely webinar that we're going to talk about this. What I normally do is and if you follow my trades, I like to use buy stops and sell stops to take my positions. Now, a couple of things about that. One is that a lot of people will say, well, I can't afford to do that because my account's not large enough. Well, my response to that is the simplest thing for you to do is find a broker who will allow you to adjust your lot sizes accordingly. So, for example, let's say I have a 2,000 euro account, and I've only got 2,000 euros to trade with, and I don't want to trade, for 1 euro a pip, all right? So what I need to do is find a broker that allows me to trade for, 5 euro cents a pip, or 3 euro cents a pip, or 15 euro cents a pip. That's the kind of broker I'm talking about. So what that allows you to do is it allows you to take these trades with long stops. Because what will happen when you use this technique is you will always have a stop loss further away. It doesn't mean that your losses are going to cost you anymore because, again, we're adjusting our lot sizes, right? So I know that a lot of you think that's old hat, but a lot of people still question that, and they say, well, I have to get in on a retracement because, my account size is so small and I need a tight stop. Well, my first reaction is there's no way that we should be risking too much on any given trade. Just period. That's it. Full stop. End of game, right? So if that's happening, then we need to find a new broker that will offer that. There are plenty of brokers out there. Many of them who I'm sure you can find linked up here on this wonderful site, and they will give you accounts where you can adjust those lot sizes. So, all right. So here's the trade that I was looking at. So on this was Friday, I believe. Yeah, that was Friday, right? And then that was Friday. Yeah, okay, so this was Monday right here. Okay, this is what happened. On this one, let me adjust this chart just a little bit for me because it will make it easier for me to do what I want to do, which is basically adjust how fast we see these candles. All right, so here we go. We are on Monday. Whoops. We're on Monday right here. All right? So this is Monday the 26th. Now, what I was thinking was that the market came up here, tried to get outside this box. Notice that we have a box here. We have several touches on the bottom of the box, a false breakout, and we have at least 1, 2, and then this third touch on the top of the box. So what I was thinking when this happened, I said, actually on Monday as the candle was forming, I predicted that this pair would go up, and those of you that follow my trade videos know that I was talking about this. I said I expect this pair to get up to around 28.10, and it did. It went up to 28.18. And then I said what I would expect it to then is to fall. And so instead of getting in at 28.10, though, I wanted to place a sell order right here where that white box is, so that the market has to make a new low to push through my sell order. I didn't get in when the market came up to 28, 28.05, 28.15, which is where I expected it to sort of wick into. And it did, right? It did. It went to 28.18. And then it pulled back and it closed there at 28.06. So it did exactly what I expected to, and it looked like to me that this was going to fall and go through the lowest low here, which is right here. So it would have been an order around 27.60. But it didn't. You see, the next candle, what it did was it went up. And so what that meant was I didn't take a trade. Now, if I had got in immediately, I would have had to withstand this really heavy, 30, 40 pip drawdown. And now, today we don't really know what's going to happen. It's really not that interesting right now until the daily close for me. But at this stage, it looks like it possibly could double top here and then actually fall through this area again. But my technique for avoiding this potentially losing trade, now it probably wouldn't have been a losing trade, but it's certain because I would have had my stop right here. I'll show you where my stop would have been, of course, above this high here. It would have been around there. So it hasn't hit the stop yet. But what it has done is it's gone against the direction that I expected. And so by putting a sell order 5 pips below the low of this candle, which is 72, so that means around 65, right? Or sorry, 67. Around 1.2767 would be the sell order. And really, I want to see that triggered during the European or New York session, not the Asian session. So by putting that order there and seeing that the next candle, the next day it went up like this and did that, I just removed my order and say, okay, that's fine. It's a no trade, right? It's a no-brainer. So that's a great example of using this trick. So how does it work? The trick is to use for sell trades. For sell trades, I use a sell stop 5 pips lower on the daily chart. So it depends, if I'm using even if I'm using a 4-hour chart, I'll usually do it 3 to 5 pips lower. Maybe on a weekly chart it's 7 pips or something, but the basic idea is that I'm waiting for the market to push through and make a new low. And what that does is it forces the market to go in the direction I expect it to go. A lot of traders are really keen on getting these massive reward-to-risk ratios, and you can get those if you get in on retracements. However, my experience has been that my win-loss ratio takes a nosedive. And my experience has also been that most traders don't like that. Most traders don't want to have anything to do with losing trades. And so one way to do that is to basically wait for the market to confirm that it's going to go in the direction you want. Now, why would I wait for it to do it during the Europe or New York session? The reason why is because in most cases, the Asian session will go sort of drift around, and usually it goes in the wrong direction. Not always, but 7 out of 10 days, if the Asian session is up, then the candle will close down. Now let's take this chart and see if that's the case here. I don't know if it's true, but let's take yesterday's candle and let's see if it's true. I suspect that it is. Let me go ahead and put the time period separators so we can see. Okay, so here's yesterday. Okay, so we opened here. So Asia went up, and then by the time, let's see, this is, let me just see here, 7, 8, 9, 10, 11, 6. Okay, so this is Asia. So Asia went up, and basically the end of Asia is roughly here. So it went up about 36 pips during Asia, and then for the rest of the day, New York and London, it fell 14 pips. So it went up 36 pips and it retraced roughly half that, or a third of it, a little more than a third of that during the rest of the day. Let's see today. So today it's 10, right? So you would basically say Asia was from here to here. That's really a choppy day, went up and down during Asia. It's not a whole lot really good to say about that. Let's look at this day right here. You can see Asia took it up, and then London took it down, and then New York took it up. And that's very, very typical, where Asia will go one way, and then London will often move it down the other direction. And then you can see later on in London, and when New York came in, it actually went higher. But this is a classic day right here, where it went up during Asia, sort of spiked up there, and then finally fell later on in the day. But I don't want to take a new low or a new high during Asia, because they're not as important to me as the highs or lows that are made during the really, the volume periods, which are now, basically, now and when New York opens. So that's how I use it. I use a sell stop for sell trades and a buy stop for buy trades. Let me show you another one. This was the Canadian dollar, and I was really actually keen on this trade. I was waiting for the market to trigger this Kangaroo Tail. Now, a lot of you are familiar with this Kangaroo Tail pattern, which is essentially it's an open to close in the bottom third of the candle. The candle has an open and a close inside the previous candle's range from high to low. And then the next candle has to trade lower. See, this is what happened. The next candle did not trade lower in this case. In fact, what happened was the candle did that. So here's my Kangaroo Tail, and then Asia went up, came back down during New York, and it didn't go low enough to trigger the trade. So it's a no trade for me. So I wait one candle. I expect a new low to confirm that the market wants to go lower. Now, of course, yesterday it did go lower, but that's too late for me. I want to see it immediately go. And if you go back to the Singapore dollar, you'll see a similar one here. Here's a Kangaroo Tail right here, a little bit higher than the last one, which was right here, which, by the way, both of these Kangaroo Tails were triggered, right? This Kangaroo Tail the next candle made a new low, and this Kangaroo Tail, the next candle made a new low. So both of them are valid and were triggered. And so this candle right here, yesterday's candle, does not qualify as a Kangaroo Tail because the open and the close are not in the bottom third of the candle, and the close is actually outside of the previous candle's range. See how that close is all the way up there at 1.2822, and the high here is 1.2818. So it did miss it. It didn't. If it closed a little bit lower, it would have qualified, but it would have been ugly because there was it's in sort of in the shadow of this candle. And the ideal kangaroo tails for me are the ones that have a lot of space here, like this one. See how this one has all this space to the left? That's really what you're looking for here. It's something like that. See all that room? How much of that candle is printed in a unique area of the chart? That's really the key for me. So there you go. Okay, are there any questions about using a sell stop or a buy stop to get in? Maybe we should look at a buy stop example. Let me try and think of the last time I took a buy trade. Oh, I think it was on was it the CAD Swiss? No. The Euro CAD? No. Euro Kiwi? Ah, yeah, it was the Euro Kiwi. Yeah, Euro Kiwi. So in this case, this was a really tricky trade. I got out of it because it scared me, but I didn't really hold it for profit or for the stop loss. I just got out at a minor loss. But basically, this candle here there's consolidation then a kangaroo tail. I like those in terms of trending. Trending markets, it's a really nice trade. So on this one, I was waiting for the next candle to make a high, and it did. And then it went up, and it looked really good. And then it printed this special case of a naked pattern called a belt, and that was ugly, and then I decided to get out of it. I didn't want to have anything to do with it. But then, of course, it took off last week, and it's still going up this week. But this is another one where it had to really make a new high here. You can see the high on this candle was 6803, 1.6803, and the high on this candle was 1.6815. So it did go higher. It did go higher. And that's really the key for me, is the market needs to show me that it wants to go, in the direction that I expect it to go. It really wants to go there. In the case of the pound Swiss, this was a kangaroo tail here that triggered. The original stop was up here above the high. It's this candle right here. I moved it to break even. Once it got really close this week, it got really, really close to our target down here at 43.20. And it started to pull back, so I decided to move my stop to 44.47, just to make sure that it didn't get stopped out. And so far this week, it's only peaked right there at 43.91. So it's still good. It hit target 1, and now with the break-even stop, I'm waiting on target 2, which looks like it's about 100 pips away. So hopefully it will get to that by the end of the week. But again, why was this trade taken? Because the next candle traded lower. See? That was the whole key here, was that this candle traded lower. Now, a lot of people looked at this, and actually I got a lot of emails that said, whoa, what are you doing? There's a kangaroo tail, but then you got another one. So at this stage, we had two kangaroo tails, right, back to back. Well, my whole thing about taking these reversal setups, if it's a reversal setup, not if it's with the trend, if it's a reversal setup, it should have space like this one did. If I take and extend this much of the kangaroo tail, the last bit of it right there, I can pull it all the way across, and it doesn't hit another candle until this last kangaroo tail over here. That's a good sign. That's a pretty good sign that this was probably going to be a swing point. And, of course, it has turned out to be the case. Even if today it takes off and goes higher and takes out, 46 today, which is highly unlikely, it still would have been a swing point, right, because of all these candles have fallen since then. So I'm holding out for 41.20. Now, one of two things are going to happen. It's going to come down and hit 41.20 and cash me out, or it's going to go up and hit 44.47 and just be a 5-pip profit on that one. That's it, one of those two things. But again, what was I doing here? I was waiting for the next candle to confirm. Even though it wicked and made a nasty move, I expected it to do so because I had a line here, right? These are support and resistance levels, so I expected that. So that's basically, I expected this kangaroo tail here, the one that I took, to be the reversal point. I didn't expect this one here, which, by the way, printed inside the shadow of this candle. It was totally like in consolidation. All these other candles over here was in this area, have been trading in that area. So it just wasn't a very good sign that the market was ready to go up at all. Now, if we get one down here or down here, then yeah, but not that one. That one wasn't good enough for me. Okay, so are there any questions about this? About this strategy of using, you're basically saying, and if you think about it, the easiest way for me to talk about this is to say this. If let's say that this trade here that was a loser, all right? Let's just for giggles, let's say that this trade right here, this Kangaroo Tail, was going to be a loser. Now my question for you is this. If this Kangaroo Tail right here, this sell signal from me on the pound Swiss, if that was a loser, how likely is it, and remember my stop loss is going to be above the high of the candle, right up here, right? On this one, it was 45.90, I think, or something like that. 45, right on the high. It's 45.89, 45.91, somewhere around there. If that's going to be a losing trade, the market has to go up, right? So if I get in on a retracement, right? So if I decide I'm going to get in on a retracement here, I'm not going to wait for the market to make a new low and go below this Kangaroo Tail. Then guess what? I'm basically, if I get in on a retracement, I'm guaranteed to take every losing trade without fail. Because every losing trade is going to go all the way up here and go beyond the Kangaroo Tail and hit my stop right up here, right? Because my stop is right there. There's my stop. So I'm guaranteed every losing trade if I get in on a retracement and I say I'm going to sell at 45.30, let's say. Keep my stop really tight. You know, I got a 60 pip stop. But remember, every losing trade has to go this way. It has to take out my sell order, and I get stopped out up here. Now, if I do the opposite and I just wait for the market to clear my order, doesn't guarantee that it's going to be a successful trade, right? It still could have come down here, bounced, and then stopped me out. But every winning trade has to go this direction. So for me, every losing trade has to go through this area and up to my stop, and every winning trade has to go below the low and toward my target. So that is why this is such a powerful technique. I know it sounds simple, and I know a lot of people here are going to say, it's not for me, I don't want to do it, I don't want to try it. All I'm saying is that there's a couple of things that are nearly guaranteed. If I use this technique, I'm nearly guaranteed to improve my win rate, and I'm nearly guaranteed to not pull my hair out every time I get in on a nasty, and the market retraces really badly. Because if you look at this trade, how many days did I take heat on this trade? Trade's triggered on the next day. Okay, great. What happens next? If I use my technique here like I did on this pound Swiss, guess what happens? I take 1 day of heat right here, right? And then next day I'm basically at break even, okay? I close basically at break even. And then it's off to the races. You know what I mean? It's off to the races. Comes back up basically, in slight profit at the end of this day. So at the end of the first day, I've taken heat. Second day, not much. Third day, I'm in serious profit. Fourth day, it retraces. Fifth day, I'm still in profit. Sixth day, I'm getting really close to my target. Because remember, my target was right here, 43.20. And how low did it go? It went to 26. So it missed it by 6 pips. It really bummed me out. So that's when I decided to move my stop loss to break even. And I knew it was going to have some support here because in the past there have been support in this area, right, and resistance in this area. So I knew there was likely to be basically what happened here, which is 2 candles got stuck there. Then finally it pushed through, and now today it's going even it's a great trade now. I mean, now you look at it, the it's up 231 pips. So, but the real key for me is if I had gotten in up here and it was going to go up and stop me out, guess what? I'm guaranteed to get in every losing trade if I do that. Now let me show you something. There's a trade on right now. So here's an example, okay? Right now, this is the pound. I'm actually willing to this could be a trade to sell. I'm going to wait until the daily candle closes. But here, what we have here is in essence a broken kangaroo tail. Okay? And what that means is the market printed a kangaroo tail here. Now, let's say that I was interested in taking a trade here. I wasn't, because I didn't have it identified as a strong support and resistance level. But some people may have. They said, look, there's this these highs right here, and this kangaroo tail printed. Looks really good. I think I want to take a trade, so let's go for it, right? Some people are interested in this trade. Well, if I got in a retracement, I'm now stopped out, because remember, my stop loss is down here below the low. And the other thing is this technically isn't a kangaroo tail because the close is not inside the previous candle's range. So it's important that we do note that. It looks like a kangaroo tail, but it's not. So it's what we call a pseudo kangaroo tail, because the close is at 55.44 and the low of the previous candle is 55.55. So it missed it by 11 pips. If it had closed up, 12 pips higher, it would have made it inside there and it would have been a proper kangaroo tail. But let's say I got in on a retracement and decided, you know what, I'm going to get on a retracement here. I'm going to wait for the market to retrace, 50%, and then when it does that, I'll take my buy trade. All right. So if I do that, basically, I get in immediately, right, today. And then since I've been in, I've basically been in a serious drawdown, and then boom, I just got stopped out, and the trade's over. Whereas the trader that decided, even though the trader was wrong, that trader who decided to get in on a new high never takes this trade, right? Because the order's up here, and the market never hits it. This is the kind of thing that happens all the time, and that's why I think this is a powerful technique. Are there any questions about this? Does this make sense to everybody? Yeah, you've got to add the spread, but of course, you've got to add the spread. Yeah, you got to add the spread. It's a good point. So if you look at the chart here, right? I like these charts because they have lots of markets and things like that. Lots of CFDs, IBM, Intel, Microsoft. It's got lots of golds on here, but if you look at your charts and you say, okay, here's the pound. Well, here's the thing. You're always going to, on your charts, you really only have to worry about the spread when you're buying, right? When you're selling, it doesn't matter because the bid is what you've got. Notice on this chart it says 54.75. 54.75. That's my sell price. That's my buy price. So the only time that I really need to add the spread is when I'm buying, because when I'm selling, I've already got that on my chart. So yes, you have to add the spread, but it's critical really in terms for your buy trade. What do you mean high? I can't understand. Highest kangaroo tail? I don't get that question. Highest. Please rephrase it. What I found, the reason why I don't hold, good question, the reason why I don't hold these orders for a long time is because I found that the very best trades go immediately. I don't like to be in, I will make occasional exceptions, but I don't like to be in trades if the market doesn't go like immediately. So here's another little tiny baby kangaroo tail down here. The next candle triggered, it went back down, closed basically at break even, and then it went. Those are the ones that I want to be a part of. I don't want to be a part of the ones that don't go. Right? That are messing around. For example, I'll show you an example. I took a trade on gold, right? Maybe it was silver. I think it was silver, actually. Yeah, it was silver. Sorry. It wasn't gold. Here's the trade on silver, okay? I took this kangaroo tail right here. Now, the problem was I basically I waited another day, so it didn't trigger. See, here's the kangaroo tail. Here's the next day, And it didn't trigger. And I said, oh, I'll wait another day. And it finally did trigger. And then what did it do? It sat here for 2-3 weeks and didn't do anything. And I said, look, this is bad news. It's going to not work out. It's going to go lower. The market doesn't want to go higher. So I got out at a very, very, very small loss. Remember, I was willing to risk this much, right? You know, I was willing for the market to go down $3.30 for me to get out. But I only really took a really minor loss because I knew that when the market was just sitting on a zone, my rule is it's probably going to break that zone, and that's what happened. So that's kind of the idea behind this getting in on the very next candle rule, because if there's any momentum at all, the market's going to go. And if it just sits there, then I'm on the wrong side. And I knew, at this stage, I knew I was on the wrong side. You know, by this candle over here, I think I got out on this candle, but I'm not sure. I said, oh, I've waited way too long on this, and it shouldn't really be sitting there. It should really have gone up by now, and it didn't. And of course it did, and it would have stopped me out had I held on to the trade. So for what it's worth, there's an example right there, another one. Yes, the stop loss is greater, Luca, and I did talk about this at the beginning of the webinar. The reason, yes, so the stop loss is greater, but the risk should be the same. If you're adjusting lot sizes, it doesn't matter if I have a weekly chart and I have a 395 pip stop, you know, it's 395 pips away, or I have a 4-hour chart trade and it's 35 pips away. It's still the same risk. Yeah, it's the same risk, yeah. I monitor all these pairs right here. 1, 2, 3, 4, 5, 6, 7, 8, 9. $35 markets, and I sometimes do watch a few more. So I watch just under 40 markets. Yeah. Oh, are you talking about, John, are you talking about the silver candle? You're right. You're right. John asked a brilliant question. Let's talk about this. We weren't really supposed to talk about kangaroo tails, but we needed to talk about some sort of trade setup. It did close. No, I won't trade the Mark Carney speech. He sounds like a comedian. Mark Carney, is he on Saturday Night Live or something? Oh, that was funny. No, I just trade the charts, guys. I don't like to I don't trade. I don't try and interpret news and trade that, you know. I just trade the charts. So what? Yeah, I think I'm going to look at the moon. Lucas suggests that we should get into astrology trading. Do you know what's funny? And I probably shouldn't even say this, but you know, when I first started trading, I looked at the new moon and the euro. Take a look at that. Go back and look at the euro on the new moon and see if not the full moon, the new moon, and see what you see. I found it tended to give me some good peaks and valleys, but I don't do that anymore. But this one right here, what John said was, didn't this kangaroo tail actually close outside of the previous candle? He's right. He's absolutely right. No doubt about it. But remember, it had a long tail. I mean, at this stage, look at what the market did. So that was the biggest candle we've seen since this one over here, and it might have even been bigger than that one. Let's see. So you're right. It was $3.06 and $3.50. So this was a bigger candle. But I trade those when they're really massive like that. Like we had one on the Aussie dollar. Where was it? It was a long time ago. I think it was a daily. I'll show you. It was 2008, right? Or was it a weekly? I think it was a weekly. The Aussie dollar did something like this in I think it was right here, actually. I think it was in 2010, and I think it was a daily chart. But yeah, if it has a massive candle like that, there was a few during the tsunami and Japan. Remember that news? They had this one. This is the one. See this candle right here? When I went to sleep, because I usually go to sleep like in a couple of hours, I'm going to be asleep. And so what happened was this candle right here, this big green one, that one looked like a kangaroo tail when I went to sleep. And when I woke up, New York took it so much higher. I actually traded that one. It isn't even a kangaroo tail because the open and close are not in the top third. But see how it has a long tail and it just, there's a fudge factor there, right? I did trade that one and I actually did trade it on a retracement too, which is another thing that I don't always do. But the reason I did it is because the next day it took out the high. It already took out the high. So then I said, I'll get it on a retracement. And I got in a retracement. It still fell even further. And finally the next day it started moving back up and away. But there you go. Joan asks, do you ever decide to manually close a trade before hitting your profit? No. I'm much more likely. I like to wait for the profits, Joan, and what I will do is close before the stop, like on the silver trade. See how the silver trade, I basically took it as a loss. I think on this day, I think it was on this day right here. I took a loss, and a slight loss, but I'm much more likely to take my losses early than my profits early. It's a good question. I don't trade economic news releases. Okay, so let's take a look at the charts, guys. What are you looking at? I'll tell you the trade that I want to take, speaking of home currencies, is this one. Let me move to my 4-hour charts. 1 second. I'll move to my 4-hour charts, and I'll show you. The reason why I do that, Joan, is because if I cut my winners too soon, then it means I have to have a higher win rate to have a positive expectation. We've actually had a webinar about that specific topic, but basically that's the reason. Okay, so what we have here is this is really nice. Let me show you on this chart better. This is a really nice setup. The Aussie. Okay, so basically, see how we've had this level here at 89.42, right? So we had bounces here, it held, and it finally broke through. Remember, that principle, more touches on a zone, it's likely to break it. All of these candles, 1, 2, 3, 4, 5, 6 out of 7 candles touched the level, and then it finally broke through it. Well, whereas this one, it just 2 candles touched it, and then it went. So if I see a lot of candles sitting on a level, I expect it to break. So what happened here is the market came up, it squeezed through here, gave us a false breakout right here, and then it fell. And it could have double bottomed here, but it actually came back up and then fell through. So really, to me, this is very, very similar to that setup in the Singapore dollar. Basically what I'm saying is this is a retouch trade. How do we know it's a retouch? So what do I mean by retouch? Okay, let me show you. Well, I wasn't planning on talking about this either tonight, but that's okay. This is basically my trade right now that I want to take. Touch, breakthrough, retouch. Okay, so using the rule that we learned tonight that I've been harping on, this is where my order goes, right there. Sell order, right there. Below this low. What's the low? 88.96. So I would sell at 88.91. And I would target down here at 88.36. Where does my stop go? My stop can go just on the other side of this zone right here. So right around here, right around there. That's the stop. And what about the second target? Well, 86.70, that's pretty far away, but there's also the possibility, 86.70 is probably the best. If we go back, you might nitpick and say, well, see, 86.70 is right there. See, we are right here. So we're going to fall and find support around 88.30, 88.20, where these highs are right there. That's our next stop. And then when it falls through there, it might go to, say, 86.80 or something like that, where these candles found support. So that would be the next stop. So yeah, so this is, to me, this is a really nice 4-hour trade. It could come back up and actually touch it. See how the previous candle didn't actually touch the zone? It might still do that. It might still come up and wick into it. And this is a very similar setup to what I was talking about with the Singapore dollar, where the market had just freshly broken through a level, and then it was going to come back up and touch it and then start to move away from it again. So what I would consider this is to be just a slight move up, and then boom, it goes. Now, I could get in really tight here and put my sell order right on this line and put my stop up here or my stop above the previous candle right here. Lots of ways to do this, but the safest way by far is to simply wait for the market to push through this low and then expect that it'll get down to 88.36. Now remember, we also have to worry about this level, right? That's not very far away. And that's basically where these candles close down here. So that's around 50. But that's 88.50. That's basically how we can apply that principle to this trade right here. I like the look of that one a lot. Any other charts that you want to see? Anyone? Euro yen says, Luca, did you trade the euro yen the other night? Were you the one that was trading it? You hit your profit, right? Okay, euro yen, let's go. Let's see what we've got. All right, so we topped out here, we topped out there, pseudo kangaroo tail there, boom, bam, and we're down. So we're on support right here. This is, for me, a really critical level. It certainly looks like it's going to fall through, and it's going to make its way down to the next level around 128. I mean, I have it drawn at 127.82, but obviously, you could make the case for 128, given that these lows are right there. The euro yen looks like as soon as it closes on the daily chart below 129.50, it's going to go to 128. That's what it looks like to me, for sure. But it's not, it's not clean and clear. I like to trade the market away from price action. The reason I don't like trading the euro yen right now is because it's inside of all this junk. Right where we are is where we've been trading a lot. Look at all these candles in this area. I want to trade on the edges, up here, up there, down here, down here. I don't want to trade in the middle here. That's why I'm just kind of blowing by that chart. It's just not interesting to me. It's not in the, where it should be for an ideal setup. Euro Kiwi. Someone say Euro Kiwi. Yeah, Michael. Yeah, this is a long. So, okay. So here's the Euro Kiwi's great. So we've got a touch here, a touch there, a belt here, touch, and then guess what? We broke through, we came back down, we touched it, and we're going higher. So, the only question about this one is, where do I take profit? And that's the biggest question for this one. Where are my zones located? It looks like I've got one, well, basically where I'm at. The next one, it looks like the next one's around 75 even. Next one's right around 75, it looks like. And then after that, it looks like there's another one around 78. So, yeah. So basically, there's a couple of ways to trade this. One would be to get into a trade right now. We've settled on top of these highs over here, and we've broken above them. We technically haven't really broken above this one, but we have broken above these two. But this was a belt, and that's just a totally different animal anyway. This candle is totally weird. But what you'll see on the line chart, when I move the line chart, is that we bounced off the highs. See, here's the highs. There's a high here, a high there, and now we've broken out, bounced, and we're going higher. So this would be a typical trend-type trade where I'd be waiting for the market to get to 75.13. I could buy on a break of yesterday's high, but you'll notice we've already broken yesterday's high, right? Yesterday's high, 72.21, we've already broken it. We've gone as high as 72.73. So that is the Euro Kiwi. The CAD is, I was hoping that it would be a good trade. It didn't trigger the next day, And so I don't really have anything to say. I mean, maybe it's going to double top up here. I guess possibly it'll double top. I don't know. That's what it looks like to me, that it might double top. The Kiwi needs to close below 77.20. That's really what it needs to do. The lowest close here. Let's use this one. The lowest close we can see here is 77.04. So, yeah. So, it needs to close below 77. If it can close below 77, then I think it's off to the races. But right now, I consider the Kiwi inside this giant box right here, and it's not telling me much. So, that's kind of to me, it's kind of a boring chart. Here's the yen. We saw this all long-term trend line here. So the market was following this really strong trend line right here, and it broke it, and then guess where it found a little bit of support on this long-term trend line. That also happens to coincide with a nice horizontal level. But right here, right? But to me, this looks like a double, it looks like it's going to go here. If I were on the yen, I would expect it to settle in right here. That's the next pop, 117 pips lower. I would be shocked if the yen went up and took out this high right here. I think that the market will get to 96.20 before it gets to 99. Yeah, that's what it looks like. And then from there, who knows if it goes down to the next one or not? We don't know. Then New Zealand. Did I cover them all? Euro, Kiwi, CAD. Is that it, guys? Yeah. You know, some of these pound, I like the pound CAD, pound Aussie, pound New Zealand. I like those. Those pairs are kind of fun to trade. What I would say about this one is that the pound CAD is showing like it's moving down to 62. I would look for some support there. I think the pound CAD can show a nice bounce down there. And that, again, it's kind of like what we saw on the Euro Kiwi, right? On the Euro Kiwi where it broke above and it came back down. Pound CAD would probably do okay if it settled right here. That wouldn't be bad at all. The pound CAD came down and gave a nice bounce, like say on a 4-hour chart. If it came down on the 4-hour chart and gave me a nice big green bullish candle, that would be a pretty nice spot for me to take a trade right there. Yep. I don't know how many of you trade the pound CAD, but that looks yeah, it looks good. Heath, you're in the pound CAD trade. Did you take the Kangaroo Tail? Is that what you did? Cool. That's pretty cool. Are there any other charts, guys? Any other ones that you're interested in? Aussie yen says, Luca. Let us see the Aussie yen. Yeah, this is interesting. This is kind of like the Kiwi, but also kind of like the yen. If it can close below this low, if we can close below 86.65, if we can close below 86.65, I think it's gonna fall big time. That's what that looks like. And where would it go? Well, it looks like the next level of support is where all these highs are right here and all these lows right here. That's 84.70. That's what I would say about the Aussie yen. That's what it looks like to me. Yep. Euro CAD and Euro pound. Euro pound? No idea. No idea. I have no idea. It could get stuck where it is right now. It could get stuck, here. It could get stuck up there. I have no idea. It's kind of, the way to look at this is if you're a fib trader, you've made a 50% retracement. So, you know what I mean? That's kind of the way I look at that. The other one was the Euro cat, and that'll be our last one. Euro cat's very similar to the pound cat. I would look for this pair to get down to this area, which is the 1.39 level, and that's where I would look for a bullish play. I'd love to see the market bounce and give me a green candle down at 1.39. It's really only about 100 pips away. If it could fall another 100 pips and then show strength, that would be a nice buy to me. Yeah. Oh, the euro would be the last one. Let's talk about the euro, because everyone loves the euro, right? Not a whole lot. I mean, the euro's messy. I really don't like it. I don't like these day up, day down stuff. It's fun, like on a roller coaster, but not on trading. Day up, day down. No good. This is no good. I have no idea what it's doing there. If we look at the weekly, maybe we have a little bit more clarity. Maybe it's starting to pull back and it's going to fall, but that's just a maybe, That's not very clear. I agree. It's a mess, Luca. And euro is boring, Black Cat says. Yeah, it's pretty ugly. Pretty ugly. I think if I had to guess, I'd say it's probably going to fall, but there isn't any clear price action on there for me, so I just stay away, Even the ones that have good price action in consolidation, I don't take, you know what I mean? Leave it for the scalper, says Heath. I'm with you. I am totally with you, Heath. That's my motto. On the euro, well, there was a possible buy order on the 4-hour when the euro came up here, but it fell through really quickly. Yeah, it's just really ugly. I mean, maybe if you trade the 15-minute chart, you can find something sexy on it, but it's just not. It's not, you know what I mean? It's just not doing it. It's not doing anything fun. Yeah, I don't like it. If I were trading the euro, I'd wait for it to get to the high up here or the low down. It needs to get away from all of this junk right here. This is just a mess. There's so many other pairs. In fact, there's about 40 other pairs here. Why would I bother with the euro? I have no idea. I'm guessing it's going to fall from where it is, but I have no idea. Yeah. Thanks, Frederick. Thanks, Frederick. The best to you as well over there in your summer. Thanks, McCall. Thanks, Boyke. See you, Pan on Fire. I appreciate it, guys. See you next week. I think we'll have a different day, though. I'm going to ask if we can move it, not Wednesday next week, so we'll try another day. Thanks, Colin. Yeah, I know a lot of people trade the euro because of the spread. Swissies should give you a good spread, too, though. Should. Or the yen. Thanks a lot, guys. Have a wonderful week. Thanks, Han. Take care, everybody. Have a good one. See you next week. Bye.